It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
It's the Real Estate Breakfast too, back for another weekend as we break down for you the Australian property market. And yes, tomorrow is the first day of February. January always rocks by pretty quickly. The business end of the year really does start from tomorrow, the 1st of Feb. It's the end of the summer series too that we've been bringing you with our first week of interviews on the way on Monday. It is a Saturday, January the 31st, and good morning to Stevie and Caitlin in Melbourne. Now, we received your email about wanting to move to the Gold Coast. You're looking, as a result of some of our conversations that we've been talking about, these are these locations, these satellite areas between the Gold Coast and Brisbane. Hey, great choice too, by the way. You've got parts of your family on both sides. You want to be closer to them as well as enjoying the lifestyle and the weather. You asked for a couple of our recommendations regarding agents, which we have passed on. So keep in touch and keep listening. And let's go from the Gold Coast this morning to Sydney, where the cost of buying a typical Sydney home is now at record highs. Yes, it is pushing many buyers towards units. That has been happening for some time, or the housing in outer ring suburbs. These affordability pressures are also reshaping investor behaviour as both home ownership and property investment become more and more expensive as well as more complex. So let's take you to Anthony Landahl, our mortgage broker at Equilibria Finance. But he's not in the finance house. He's in the camping ground in the snowy mountains. Good morning to you, Anthony. Also, last day, as I mentioned, for Jan, which means we've got the RBA decision time for the first time this year coming up. But how's the camping going, first off?
Yeah, good morning, Craig. Great to be here. Starlink is obviously working at the tail end of my annual camping trip in the snowy mountains, which is always a fantastic week just to refresh before the year, as you say, kicks off in full swing from February with early next week. The first muchly anticipated RBA meeting for the year will be taking place.
Yes, a lot of people will be rightly feeling a little nervous come Tuesday. But let's have a look at Sydney's median house price, which keeps on nudging higher. And it's happening quietly rather than in big spikes. Limited stock, yes, that is a factor. Steady demand and people holding on to homes longer are keeping these prices pretty firm. Buyers are adjusting expectations, but the reality is clear. Sydney's housing remains expensive, it is competitive, and it's increasingly segmented between houses and units. What does the Sydney median house price currently sit at? We should sort of start there, I guess.
Yeah, it's a great point to start on. And as of end of December 2025, Sydney median house prices is a mouthwatering $1.759 million. That's growth over the 12-month period of $105,000. Or, if we really want to break it down, as you know I like to, it's $2,028 a week of growth through 2025. Now, one of the biggest challenges is the gap between the median house price and median unit price. Median units still sit at $844,000. It's still an affordable price point for a lot of people. And to your point earlier, even to your listener who said they're moving to the Gold Coast, it's driving a lot of people to units or to regional areas because Sydney is dead set getting basically unaffordable. It's driving a lot of people to regional areas and affordable units because Sydney's housing market is now unaffordable for many, many, many buyers.
Yes, the big drivers are still supply shortages, population growth, and uneven construction activity. That is a real factor in Sydney. Fewer homes are coming onto the market while demand hasn't gone away. Then you add stable employment and buyers with strong equity positions, and prices stay supported. I think it's fair to say it's not frenzy-driven, it's structural pressure meeting constrained supply, and we should look at what is driving the sustained price growth for Sydney in 2026.
Yeah, I think that's a really good observation. It has gone from a couple of years ago being very much driven by emotion and very much driven by, I guess, fear of missing out. There are some genuine structural issues now that are impacting the housing market. Yes, we've got the government programs that are focusing on demand and stimulating the demand side of the market. But structurally, we cannot actually build enough houses for the number of people coming into the country. The target of 1.2 million homes being built in 5 years is probably going to fall 20 to 30% short. The structural issue in our market is supply. We do not have enough supply to house all of the people. That's changing the way people are living. It's changing the way people are thinking about housing, and it's limiting a lot of people from getting into the housing market and accepting maybe we are going to be renting for the future.
We are talking with Anthony Landahl from Equilibria Finance about the cost of making the right decision in the Sydney property market for this year. When we come back, we're going to look at how affordability is influencing investor decisions and the trends among existing Sydney property investors. That is on the way after this.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
As we catch up with Jocelyn Martin, the Managing Director of HIA. Yes, the migration. Man, oh man, this is such a talking point at the moment.
Well, it certainly is. I mean, the migration numbers are really adding to the high levels of demand and certainly not helping house prices, vacancy rates and so forth. But really, this is the result of really poor planning for many, many years in terms of migration numbers and not building enough homes. Now, when migration numbers have been peaking, it's probably at the worst time it can happen, because we just continue to have demand outstrip supply.
You never know, Jocelyn, 2026. Let's try and stimulate things a little bit more positive. Let's hope that 26 we start to turn a corner, dare I say it, but easier said than done.
And I do think 2026 is going to be very positive. I think that we are working very hard with government to try and reduce some of those regulatory barriers. I think, and that's actually probably the first time that we have really had a relationship with the government that is pushing in that direction. So I'm very optimistic for 2026.
You're listening to the Saturday Property Market Update.
And as I mentioned, it is the last day of January with the Weekend Property Show, a real estate Saturday, setting you up for what might be a busy couple of days at looking at Australian real estate around the country. Affordability. Now, that is forcing investors to be sharper and more selective, no question. Cash flow matters more than capital growth stories. Borrowing capacity is tighter and mistakes can cost you more. Many investors are reassessing locations, dwelling types and holding strategies, and the days of buy anything and wait are gone, and numbers and strategy now lead the decision. Let's go back to you, Anthony. How is affordability influencing investor decision making right now?
Yeah, it's interesting. We often focus on the challenge for owner-occupiers. Investment properties and home ownership, I guess, are becoming more and more difficult and complex. So there's a number of emerging issues for investors that they now need to be factoring in when they're looking for properties. One of the big one is around affordability. a lot of owner-occupiers are now being priced out of the market. So we're seeing a lot more younger people looking at, do I get into an investment property? Do I rent vest? Do I buy in an affordable area just to get into the market? But affordability is also impacting investors on the other side when they're trying to sell a property, where we don't have as much demand from some of these younger owner-occupiers that might have historically been the ones buying investment properties because of the sheer price point to get into the markets. Some investors are unable to sell their investment properties maybe for the price point they're looking for and having to hold the properties a little bit longer, which is providing some cash flow constraints. It's probably worth just touching on a couple of other interesting trends with investors aside from affordability. We're actually seeing intergenerational wealth transfer happening earlier to grandchildren and to children, where we're often seeing grandparents buying investment properties, or we're often seeing houses converted into homes for intergenerational families because of affordability to try and shore up financial security before an estate gets passed through the traditional estate planning way. So we're actually seeing intergenerational wealth transfer come into play into the property market now, which is a new trend.
Yes, intergenerational growth. We're going to see a lot of that this year. Worth highlighting too, the existing investors are becoming more defensive and strategic. You know, some are consolidating portfolios, others are selling underperforming assets, and many are focused on improving their yields through renovations or rent optimization. You know, there is also this clear shift towards long-term holds rather than rapid training, and experience, not emotion. I know that is something that you are hot on, is driving most decisions right now. And what are the other trends that you're seeing among existing property investors?
Yeah, probably a really interesting trend on the back of rising house prices, higher interest rates. There's tougher rules now for a lot of landlords. Is we're seeing investors with larger portfolios start to decrease the size of their holdings. They're looking at holding. There's a lot more investors now just holding one or two rental properties as it becomes increasingly difficult to grow a larger property portfolio for the reasons I outlined. That is a trend that's happening. That could flow through to the rental market where there's less investment properties available for renters. We are seeing a shift in investor behaviour around holding those larger portfolios.
Well, that's going to wrap us up on our Saturday Property Show. As mentioned, Anthony, you are coming from the snowy mountains. Hey, you wouldn't want to be doing this in winter, otherwise the satellite might not work and connect us.
No, it's been a great week. Starlink's been pretty good to us this week. But you know what? Every now and then when Starlink doesn't work isn't a bad thing. It's nice to get off the grid for a while.
All right, well, go safe, Anthony. We'll look forward to your company in a couple of weeks' time, and drive safe as well when you come back.
Thanks very much, and we'll catch up in a few weeks.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
One of the benefits is that it is a cash buyer.
They are as good as cash. They can definitely negotiate confidently just based on whatever their settlement is. In most cases, that's what we'll work towards, is the subject to the settlement of that buyer's property. So that allows our seller to then move on simultaneously with those settlements.
Now, I'm not sure if you've been following this register that is now there in New South Wales. It's a sort of a shame register. Somebody is not following the rules.
Yeah, look, this whole misrepresentation on guide pricing, I think it really did stem from Victoria. Again, a heavily auction-driven market. They have to firstly acknowledge that they are in a multiple offer situation, and on top of that, they've got to give me their position straight up. They can't come back if they were an underbidder, missed out unfortunately, and said, I would have paid an extra $5,000, $10,000, $15,000. They've got to give me their best and final walkaway price.
We connect you to the best real estate information across Australia. The Real Estate Podcast.